Hey there, real estate watchers. Andrew Finney here with a packed show for you today. We're diving deep into the latest twists and turns of the housing market. Today, we're covering unexpected mortgage rate moves, a boom in down payment help, and new construction affordability. Plus, we'll tackle your burning question about future home prices. As always, I'm bringing you the freshest data from top sources like NPR, Mortgage Point, Zillow Research, and the Down Payment Resource. My goal is to bring you actionable insights to help you make well-informed real estate moves. Let's kick things off with our top stories. Mortgage rates pull a surprise move, climbing despite Fed rate cuts. Down payment assistance programs are growing with an average benefit of $17,000. New construction affordability varies wildly across markets. Is your area a hidden gem? Special programs for educators, first responders, and more are on the rise. All right, let's dive into our main story, the unexpected rise in mortgage rates. You might be thinking, wait a minute, Andrew, didn't the Fed just cut rates? You're absolutely right, and that's what makes this so interesting. According to recent data from Freddie Mac, the average 30-year mortgage rate has jumped to over 6.4%. That's more than a quarter point higher than it was just a few weeks ago. Here's the deal. The Fed doesn't directly set mortgage rates. Instead, mortgage rates mainly follow the yield on 10-year Treasury bonds, and recently that yield has been climbing. Why? Well, investors are expecting the Fed to be a bit more cautious with future rate cuts after that big half-point cut last month. But don't panic, there's a silver lining here. Current rates are still more than a full percentage point lower than they were this time last year. This has been great news for some homeowners who bought when rates were higher. Many have taken advantage of the opportunity to refinance, potentially saving hundreds of dollars a month. Now, let's talk about where rates might be headed. While it's tough to predict exactly, many experts are forecasting rates to be around 6% by the end of this year, potentially dropping to about 5.8% in 2025. Remember, these are still historically low rates, even if they're not the rock bottom levels we saw during the pandemic. If you're in the market to buy, don't let these rate fluctuations scare you off. The key is to focus on what you can afford based on your monthly payment, not just the rate itself. And if you already own, it might be worth checking if a refinance could benefit you. Now, let's zoom out and look at the bigger picture of our national housing market. First up, let's talk about down payment assistance. This is huge, folks. According to the Down Payment Resource, the number of homebuyer assistance programs increased to 2,444 in the third quarter of this year. That's 29 new programs added in just the last quarter. Here's the kicker. The average benefit from these programs is about $17,000. That's a serious chunk of change that could be the difference between renting and owning for many first-time homebuyers. Rob Train, founder and CEO of Down Payment Resource, says, "We are pleased to see a growing number of these programs and think they are becoming a targeted way to help first-time and first-generation homebuyers struggling to save for a down payment get into a home they can afford." Speaking of first-time buyers, there's been a 5% increase in programs specifically for first-generation homeowners. This is part of a growing trend to help break the cycle and create new opportunities for families to build wealth through home ownership. Now let's shift gears to new construction. Zillow Research has found that the affordability of new homes varies significantly across different markets. In some areas, new construction is actually more affordable than existing homes. Builders continue to lean into higher density with more attached single-family homes like condos and townhomes and fewer detached homes. Among the 50 largest U.S. metros, the Pittsburgh, Indianapolis, Dallas, New York, and Las Vegas metro areas were still issuing the most permits when compared to their pre-pandemic level. This is something to keep an eye on, especially if you're flexible about where you can move. Factors influencing new construction affordability include local regulations, land cost, and overall market conditions. So if you're considering a new build, it's crucial to research how these factors play out in your desired area. Here's my take on all this. We're in a market that's full of both challenges and opportunities. The rise in mortgage rates might seem discouraging at first glance, but it's spurring innovation in other areas, like the expansion of down payment assistance programs. For buyers, my advice is this: don't get fixated on the interest rate alone. Look at your total monthly payment and how it fits into your overall monthly budget. And definitely explore those down payment assistance programs. You might be surprised at what you can qualify for. For sellers, understand that while higher rates might cool demand slightly, there's still a significant shortage of homes in many areas. Price your home competitively and consider offering incentives like contributing to buyer closing costs or buying down the mortgage rate to help offset the impact of higher rates for buyers. If you're feeling overwhelmed by all of this information, don't worry. That's what I'm here for. Reach out to me directly and let's create a personalized strategy to help you achieve your real estate goals. I'm always here to help you. Now let's address the question on everyone's mind. Will home prices drop soon? While I don't have a crystal ball, here's what we know. Despite higher mortgage rates, home prices have remained relatively stable in most markets. This is largely due to persistent shortage of housing inventory. The National Association of Realtors reports that existing home sales have slowed, but prices aren't seeing significant drops in most areas. In fact, many regions were still seeing modest price growth. However, the market is always local. Some overheated markets might see small corrections while others continue to appreciate. The key is to look at local trends and work with a knowledgeable real estate professional to understand your specific market dynamics. All right, real estate rock stars, it's time to take action. If you found this information valuable, please like, sub, and hype this video. It really helps get the right information to more people. And if you want to stay on top of the latest real estate trends and insights, ring the notification bell. If you have ideas, questions, or topics you want covered in future videos, drop them in the comments below. Your engagement helps me create content that's more relevant to you. Let's do a quick recap. Number 1, mortgage rates are up, but still lower than last year. Number 2, down payment assistance programs are expanding, offering an average of $17,000 in help. New construction affordability varies by market. Research your area. Home prices are holding steady in most areas due to low inventory. Remember, in real estate, knowledge is power, but action is what builds wealth. Whether you're looking to buy, sell, or just stay informed, I'm here to help you make the best decisions for your future. This is Andrew Finney signing off. Until next time, keep investing in yourself and your dreams. I'll see you in the next video. Peace be with you.